Everyone, from Market Minutes today, we're going to look at AEM stock. This is another gold miner, but it's not a junior miner or mid-tier miner. This is much larger and is a pretty mature gold miner at this point. I just saw an article that said that I thought this was a mining stock to buy right now. I don't know that I agree with that or not, but I just kind of wanted to look at it. It looks like in the past year, it's up 77%. Past 5 years, 250%. So heavily correlated to gold prices, which today took a big dump. I think we're at 4,800 about right now. This was over fear of then the core inflation data that came out today that was higher than expected. What did Jerome Powell say today? He said that basically said that this inflation data came in before any news on the strikes of Iran, so that's not even included in this data. He doesn't know how the strikes in Iran will affect that inflation data. Said that I think still about half of the Fed chairmen want to cut rates this year. The GDP came in a little better than they were expecting. They still want to cut rates. So that's kind of what the fear is. But let's be honest, the price of gold isn't going up because of Fed rates or whatnot. It's going up because central banks are buying gold across the world for various reasons. A big reason is when Russia invaded Ukraine, the United States froze all their reserve assets, which were US dollars. So a lot of Eastern countries, namely Russia and China, among a few others, have been buying gold reserves to kind of back off away from the US dollar. And then on top of that, there's obviously the debasement, de-dollarization trade. The dollar will continue to lose value. It's still, when people say the dollar is strong in a dollar index, they're referring to other currencies. So maybe it's strong compared to, the Japanese yen or something like that, or a different kind of currency. But it's not accounting for how strong the dollar is compared to commodities. So that's why gold's really going up. Short term, the interest rates are going to influence that. But let's be honest, the Fed doesn't want to raise rates either because the American government has $40 trillion in debt. And adding a quarter percentile interest rate on 40 trillion in debt is hundreds of billions of dollars. So that's really why gold's going up. This is all just short-term noise, but you should be aware of it. You should know that with gold miners, they're still very profitable even after this 3.5% drop today. So you need to know that background before anything else with AEM. So that's kind of where that. So here's AEM. They made almost 3.5 million ounces. Let's see. AIC was a little higher than I thought it would be. I want to see how much they sold. What was the average cost per ounce? That's what I want to see. I'm going to bet it's around 4,200. Let's see. Cost per ounce. Nope. Let's see what they sold. I could probably find, I'm just going to ask ChatGPT. What was the average selling price per ounce of gold for AEM? Yeah, this article is one where I found it. Okay, so they're saying 4,163 per ounce. So about there. So with that, and that right now we're $600 above what they were selling in this quarter. If gold keeps going down to 4,000, then this is what they'll make. This is about what they'll make. So let's go to, okay, realized, oh, they have it right here. Realized gold price is 4,163. net income in millions, adjusted net income. They have their financial results a little different. This is what I'm looking at. Yeah, they're reporting a little different from what I'm used to seeing, which is fine. This is a foreign issuer, so the accounting standards are probably different. I want a better breakdown than what they had. Maybe I won't get it. These are all their mines. No, I bet the best I'm going to get is this. So, okay, so net income is the realized gold prices here. They had a very strong net income when compared to last year. That's almost a 200% increase in net income, which is insane. And that's at $4,100 an ounce. And their free cash flow is up about 100%. So this is really, free cash flow up 100%. That's really good. So again, all dependent on gold prices. Let's just look at the valuation real quick because that's the accounting side. If we just look this, I want okay. I want to remove this. I want to see. There's usually a comparison here, but that's fine. Usually like a summary. But okay, so the PE ratio is 22, which is pretty high for a gold miner. It's not going to show me that, but like let's look at one of their probably bigger competitors. Let's look at NEM. Yeah, I was expecting like a summary like this, but it didn't have it. So this is the PE ratio for this for NEM is 16. So 22 is a little bit on the higher side. So if it were me buying a larger gold miner, I would probably buy NEM rather than AEM, just because the valuation is a little bit better. Honestly, I'd be buying junior miners rather than these more well-developed miners, but I just kind of wanted to look at this one. So there you go.